Good evening. Thanks for joining us on India Business Hour as we close out this Sambat. I'm Shireen Bhan. Let's go straight to the market action of the day. The markets have ended Sambat 2076 on a positive note. The Nifty and the Sensex gaining close to 0.25%. In fact, the Lal Street has posted gains in 9 out of the last 10 trading sessions. The mid-caps outperformed the benchmarks, ending close to 1% higher, while the Nifty ended 0.5% in the green. ICICI Bank, Reliance and Infosys leading from the front. So how have the markets fared from last Sambat to this Sambat, and which are the big movers and shakers? Nigel D'Souza is standing by with the details. Nigel.
Well, from last Sambat to this one, the defensives have come back in the game. So you have the IT as well as the pharma index. They are sitting with big gains of around 40 to around 50% odd. But otherwise, if you look at the mid-cap and the small-cap indices, well, they managed to eke out some kind of gains. The Nifty itself is up close to around 9%, and that's without its prime composition. That's the Nifty Bank stocks. That, in fact, is an underperformer. Despite of the big run that we have seen in the last month or so, that's still down close to around 6% in the last 1 year. From the Nifty, well, which are the stocks that are gaining? Just pull up the list out there. You'll see a lot of IT and pharma names. They, in fact, top the list. Divi's Laboratory has made an entry into the Nifty in the past year. That's the biggest gain out there. But Dr. Reddy's as well is giving it company. Add to the list the big boy, Infosys as well as Cipla. Both of them have done well. And Reliance Industries, bulk of the gains because of its high weightage on the index have come in primarily because of Reliance Industries. Well, in terms of other stocks that have done well, a couple of metal names. You have Tata Steel as well as JSW Steel, where they're in there with gains of around 30 to around 50%. But it's not really been all guns blazing, because there are a few stocks that have been underperforming. Some of those public sector units, like of ONGC and NTPC, they're still sitting with cuts, while the Nifty, in fact, is up nearly around 9% for the last 1 year or so. IndusInd Bank is still lower, in spite of that big run that we've seen in the last month and a half or thereabouts. Coal India continues to struggle, and L&T, that's the big boy in there. That's been a relative underperformer. But there have been plenty of gainers from the broader markets. You got the right stock right, you'll in fact be making big money. Granules is up close to around 200%. Escorts, the rural theme, has done well. That's more than doubled your money if you got that stock. And JSPL as well, high beta, but if you got the timing right, well, that as well did double your money. In terms of mid-cap IT, Mindtree deserves special mention. That's given you some gains. And also Balkrishna Industries, the tire play, that's done fairly well. In terms of losers, a lot of banking names are losing. In the last 1 year, you have PNB, Union Bank, Canara Bank, Bank of Baroda. All of them are down in the last 1 year or so. And throw in there a couple of other names, like BHEL as well as Oil India. Both of them are struggling. Well, so that's been the past 1 year odd. The Nifty has managed to eke out some gains thanks to the IT and the pharma stocks. But otherwise, the Nifty Bank still a relative underperformer.
All right, Nigel, many thanks for summing up the Sambat for us. And ahead of Diwali, the government decided to do its bit by announcing the second set of stimulus measures, or Atmanirbhar 3.0. In fact, we now are joined by the Economic Affairs Secretary Tarun Bajaj. He's in conversation with my colleague Sapna Das on whether this is it for now or we should expect more. Sapna, over to you.
Hi Shireen, a very good evening. In fact, yes, you're absolutely right. We are joined by a very special guest right from the heart of policy making, Mr. Tarun Bajaj, the Economic Affairs Secretary. So thank you so much for giving time to CNBC TV18. The first officer after Atmanirbhar 3.0. Can we expect the next set of measures, if at all, depending on how the government looks at it, in the budget, or something maybe even possible for that? Or rather, what I'm trying to ask is that is this it for the moment, and now wait for Feb 1?
Sapna, I think we have just announced the measures yesterday, and it will be too much for me to say today that yes, tomorrow again we are coming back to you. And so as of now, this is it, but we would watch the situation, how it emerges on the economic front, and if there is a need, we'll see. But the budget is not too far, as you have very rightly hinted.
Right. A tiny question right over here that, basically the budget also will be kind of outlining the government's roadmap on the economic recovery. So I suppose whatever could be the next set of relief measures, and every year, every budget has some or the other, relaxation, some of the other relief measures, boosters, stuff like that. So, clearly, I mean, Feb 1 will be the next timeline that, people can look at, stakeholders.
So if you're asking me in the budget if they can look for something, I think it's too early for me to say that. Today only we have issued a press release requesting a crowdsourcing mechanism for people to give us suggestions and also the associations to give us suggestions. So let's wait and watch. We'll put our minds to it and see what is required to be done, and the situation is emerging on a daily basis. So whatever the need be, we'll do that.
Sure. I'll come back with some more questions on that front. But so at the moment, if you look at the latest CPI numbers and the general commentary from Reserve Bank of India in terms of inflation, the risk of inflation getting generalized, does it indicate that possibly the room for maneuver, or rather room for further rate cuts, is very limited or ruled out as of now? I mean, that's what the general commentary that we are getting from various stakeholders. Would you agree with that?
Sapna, one thing which I like to say, whether there's a rate cut or not a rate cut is within the domain of the Reserve Bank of India. I would not like to say that, but yes, I would like to comment on the inflation front. What we feel is that perhaps this is a temporary thing and it should go away. It should cool down in the times to come. Some measures have been taken by the government in the immediate front, and also once the new crop comes, because the maximum inflation that is being contributed is through the food inflation. So I think it should cool down. Just today I was having a meeting with the IMF team, generally trying to understand as to how they see the whole economic front in India. And without me prompting or asking them this question, they themselves had mentioned that they also look at that the inflation should actually come down.
Okay. So within this, there has also been a talk in terms of the MPC framework. They already have an inflation for targeting of 2 to 4%. I mean, plus minus. It it moves somewhere around that. So would that also need some kind of tweaking? I know I'm asking a question which is not probably may not have a quick answer as of now. But would that also, I mean, the inflation trend as of now, can that also cast a shadow on that framework that we are working with? Some tweaking may be required, sir?
Sapna, you've answered my question that it's too early for me to comment on that. That is up to 31st of March. So we will do discussions with various stakeholders on that and take a considered view. And we'll also see every event is an experience for us. So this COVID has been an experience for the world, for us as well. So we'll see if whatever is required on that front, we'll take a call. We have not taken a call on that as yet.
Okay, okay. So also going back to the 1920 budget, there was an announcement for a sovereign bond. The government had made an announcement in the July budget. We didn't hear anything much after that. So is this proposal being revived at some point in time? I mean, is it under consideration or is it not, sir? Any thoughts on that, if anything can be shared?
It is, presently we are not considering anything like that. We have already announced our borrowing program of 12 lakh crores and we are continuing with that. Apart from that, we are also now to borrow 1,10,000 crores for the GST compensation cess. So that is also going on smoothly. So there is nothing as of now on the table. Yes, that was announced, but I don't think it was carried forward after that.
Okay, so nothing at all on that front as far as the sovereign bond is concerned for the current financial year.
Yeah.
And you did say that 12 lakh crore of gross borrowing plus 110 for GST. Since the GST borrowing is not reflected on your fiscal deficit, so that really doesn't make too much of a difference. So a very quick, smaller question here again, and this is something that you've been asked over the last couple of weeks. The Atmanirbhar 3.0, so additional spend at 2.65 lakh crore, though of course if you put out the manufacturing PLI part, actually it comes down to a lakh 0.20 crore. So what we want to understand here is that where is the financing going to come from? Because you have announced a series of measures, your revenue trend has yet to pick up, and obviously because of COVID it's going to be depressed in the current financial year. Would you be looking at additional borrowing at some point in time, say maybe December end or Jan?
Sapna, we have done an analysis in-house of where do we stand on that front. Let me take you through this analysis a bit. The first thing is that we are watching our revenues very carefully. So in the month of May, when we announced an enhanced borrowing program, and compared to that how the actual revenues have moved, I think we are better off than most of us actually thought we would be. In the last month, our GST collection was more than 1 lakh crores, and we are hoping the same trend to continue even in this month. Also, we have a good revenue coming to us from the excise duty front. So on that front, we
Petroleum duties.
So we actually have some good revenues are actually moving up. They are not as good as the budget estimates were, but they are better than what we had estimated. And so we will watch the situation. As of now, we are sticking to our 12 lakh crore borrowing program. And we also have some other resources like the small saving funds that also funds our fiscal deficit. So there is a growth there also. So we are watching the situation. As of now, I can categorically say that we have no plan on our table to do anything on that front.
Well, that is the Economic Affairs Secretary in conversation with Sapna Das. On to another exclusive. The DPAM Secretary Tuhin Kanta Pandey has said that there are no requests to extend the EOI submission deadline for the BPCL stake sale beyond the 16th of November. In an exclusive chat with Sapna, he also said that his department is trying to persuade the Railway Ministry to resolve the land-related issues that face Container Corporation so that that can be divested quickly as well. Take a look.
Well, the transaction advisors, they are in touch with our potential investors. They haven't got back to us with any requests for the extension.
Okay, so no further extension, no further request from transaction advisors as of now for any further extension. Sir, had the request had to come in, then would it have already come in by now or maybe by Sunday?
Well, I would, I think I've said, you know, what I meant to, yeah. I think the railways, we have been pursuing with the Ministry of Railways to come out with a policy as fast as possible.
Okay. And will it need a cabinet nod as well, sir?
Yes, they will need a cabinet nod.
Suppose that you will be incorporating it in your EOI?
Yes, I mean, post that we will issue the EOI. Our EOI is actually almost ready, waiting for clear policy to come.
Okay, so can we expect that sometime in November?
Well, we are hoping so. I mean, we are persuading the Ministry of Railways to come out with a policy soon.
All right, that's the DPAM Secretary saying that at this point in time, there is no request to extend further the deadline for the expression of interest for BPCL. Remember, that deadline expires on the 16th of November. A quick check of some of the other headlines that we're tracking. Active COVID cases in India fall for the 41st day in a row, slipping to 4,84,000. The recovery rate improves to 93% in the last 24 hours. That is to 8 a.m. this morning. Back home, 57% of COVID-19 insurance claims worth around 4,800 crore rupees are yet to be settled. The latest data from the General Insurance Council shows that over 5.5 lakh claims have been filed with an average claim size of 1.5 lakh rupees. The average size of settled claims stands at 93,000 rupees. The centre, we learn, is open to the idea of increasing capacity of domestic airline companies. Further, earlier this week, the government allowed domestic airlines to deploy up to 70% of their flight capacity ahead of the Diwali weekend. The United States of America reports more than 1,53,000 new COVID cases on Thursday, with over 66,000 people reportedly hospitalized. Reports suggest that restrictions have started to contain the COVID spread in some European nations. The WHO and Gavi Vaccine Group Alliance exceeds its interim target of raising $2 billion to fund COVID shots for poorer countries. In a statement, Gavi has said that another $5 billion will be needed in 2021 to procure vaccine doses as they are developed and approved by regulators. Israel signs a deal with Pfizer for 8 million doses of the drug maker's potential COVID vaccine. Prime Minister Netanyahu says his goal is to start the vaccine supply in January and ramp it up in the months thereafter. Well, the government's investment cells have identified 36 global companies that are looking at relocating their supply chain from China to India. Sources in the government tell us that 19 of these 36 companies have indicated investing between $10 to $12 billion altogether. Anshu Sharma joins us now with the latest. Anshu, what are you picking up?
Government has formed a project development cell that has identified 36 companies that are looking to relocate supply chain from China. Now, we learn from sources that 19 out of 36 companies have indicated investment plan above $10 to $12 billion. Now, the project development cells have shared the potential investment plans of companies with the empowered group of secretaries, which is led by Cabinet Secretary. There are 29 PDCs attached with ministries, which is mandated to push investment proposals. Now, these PDCs have consulted over 600 companies and have feedback from over 150 companies about possible investment plans for India. The estimation is that of over $20 billion possible investment from these 150 companies. Now, PDCs have also told the empowered group of secretaries that there is high chances of investment from companies like Apple, Intel, Walmart, Nayara Energy, and many companies from countries like US, Japan, Taiwan, Singapore, UK, Germany, Korea, amongst others, for specific sectors like electronics, renewable energy, IT, BPM, retail, e-commerce, oil and gas, and consumer goods. Back to you.
All right, Anshu, many thanks for joining us. It's time now for us to head into a break. But coming up next, Bihar's Chief Minister Nitish Kumar says the NDA constituents will meet on Sunday to elect Bihar's next Chief Minister. That and more on the other side. It's been 3 days since the results of the Bihar State Assembly elections were finalized, and there is still no clarity on who is likely to lead the next government in the state. Of course, the expectation is that it will be Nitish Kumar for a fifth term. The members of the National Democratic Alliance will meet on Sunday to decide on the details. Meanwhile, incumbent Chief Minister Nitish Kumar has submitted his resignation to the governor. This is a formality in the run-up to the formation of a new government. And more stories making headlines tonight. West Bengal's Finance Minister Amit Mitra has urged the centre to borrow the entire GST compensation shortfall of 1.8 lakh crore rupees at 5% interest through the RBI special window. He says state finances will be hurt if they have to borrow 72,000 crore rupees directly at close to 6.8%. Argues that the centre's fiscal math will not be hit because the entire loan will be serviced through GST cess collections. CNBC TV 18's Newsbreak confirms Swedish steel giant Saab has confirmed that it is in discussions to pick up Tata Steel's European steel business, but says no decisions have been made yet. A group of U.S. election officials, including federal government officials, contradict President Trump's voting fraud claims. The group issues a statement saying the 2020 election was the most secure in American history and there was no evidence of any voting system being compromised. Reports say that former U.S. President Barack Obama, in his soon-to-be-released memoir, has likened Congress leader Rahul Gandhi to a student, and I quote, who is eager to impress the teacher but lacking the aptitude and passion to master the subject, end of quote. Rahul Gandhi had met Obama during his last visit to India in December 2017, and this has kicked up a storm back home. Well, with that, it is time for us to wrap up this edition of India Business Hour. As we wrap up, we wish all our viewers a very happy, prosperous and safe Diwali and Samvat 2077. We leave you with views from the masters of the Lal Street, Rakesh Jhunjhunwala, Shankar Sharma, Rhythm Desai, S. Narain, on their expectations from the new year.
So I think there is going to be a tsunami of capital into the stock markets, both in foreign and Indian. Because I think most Indians and foreigners are still not bullish about the Indian economy. And, you know, the signs of the economy and the reform, according to me, is going to see this year, suppose you have 10% negative growth. I think next year we'll have 10% positive growth. So we'll reach levels of 2019-20. And remember, in 2019-20, we lost 15 days in March, right? And after that, I believe we are going to grow 6, 7, 8, 9, 10. So I think we may need, it's my opinion, I have the right to be wrong, I think we'll reach the double-digit figure in 5 years. We have to have God's uncertainties on our side. And I'm bullish on India more than anything else for the economic growth that lies ahead for India.
If you go back in time, from 2010, the underperformance of emerging markets started. And till, you know, a couple of months back, they have been absolute dogs relative to the, let's say, US markets. That trend, I do think, is now beginning to change a bit, which is good for markets like India, which is good for markets like, you know, even the neighboring countries around us. So I think that trend appears to become a relevant consideration, because emerging markets were the forgotten equity class in the last 10 years.
we actually see acceleration in growth. And as growth accelerates, smaller firms do a whole lot better because they have financial and operating leverage, which works to their advantage in a better economy. So the key call here is that we think the economy is heading for better times in the next couple of years. And if that is happening, then I think the broad market outperforms the narrow market.
It's been one of the best bull rallies that we've seen after 2009 across the world. And having said that, we have to accept that this has been a bull rally engineered by the global central banks led by the Fed. And while I do agree that we are going to have a broadening of the market rally that we have seen because it was a very narrow rally, I think it is not a 2003 to 7 rally in certain respects.